Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the forexpeacearmy.com. Today the 22nd of August, we will continue to discuss the situation on the EURUSD. As usual, we will start from the daily time frame. Well, since the previous week there is not much new to discuss on the daily time frame. Let's just point some important moments that now we could see on the daily time frame. First of all, do you remember we have discussed this head and shoulders pattern that is still forming and hasn't yet resolved? Well, in general, the time is nearer to end for that pattern because the left shoulder has been formed during the 17 days, while right shoulder already is forming during the 18 days. So in terms of harmony in time, well, this pattern should be resolved by the market sooner rather than later. And if market should show some move in some direction, because the time that was for that pattern now almost has been ended. Okay. Well, the second. Still on this chart, I see some moments that I do not like from the bullish perspective, and one of that moment is that splash out of the neckline. I do not like it very much. From the bullish perspective, it's not a welcome sign. It's not very common for the head and shoulders pattern. The second moment is the trading volume, stick volume on the futures of the euro currency. Well, this is the huge advantage of the futures market because I could see the profile of the market, although the values itself is much less than on the spot forex. This is the pure reflection. This is the correct reflection of the overall market. It's just a bit decreased, contracted time of the trading volume. But this volume, you may be sure that the same volumes, if you will build if you will be able to build the volumes for the spot market, will be the same. The ratios between the volume of the days will be the same. You can see that trading volume doesn't support the price action to the upside. That is that is not in a row with the head and shoulders pattern. During the right shoulder of the head and shoulders pattern, the move to the upside should have the increase in volume, while we see that it's vice versa. The move to the upside shows decrease in volume. That's the worry signs on the daily time frame. So in general, despite this moment to the upside, market stands in some range. So I think that market still stands in decision, and probably during the next week we also should focus on the intraday trades, because as this low, as that high hasn't been broken by the market. Because if market will take out that high, we could start to speak about this butterfly, okay, with the target 147.44. If market will take out that low, probably we could start about that butterfly to the downside. But for that purposes, we need to take it out of the significant extremes, and maybe even that point, okay, to totally destroy that butterfly. But you can see market still stands in the tight range. From the bullish perspective, what we could say? First of all, that market accelerates to the upside and stands above the weekly pivot point for the whole week. That's the first. And the second, on the next chart, this is the same contracted daily time frame. What we see, market has broken this triangle to the upside and retested it from the other side. So this is some kind of kiss goodbye, but not quite. Well, that is the crucial area for the further market price action. So if market on the next week will return back in the body of this triangle, this will be very bad for the bulls. This is the sign that bulls would not like to see on the market. If that will happen, probably we could start to speak about potential failure of that head and shoulders pattern and potential butterfly buy or whatever pattern will be to the downside. Well, that is our crucial area, crucial point for the coming week. Track for that border of this triangle and track that market should hold above that area. Otherwise, this will be the first sign that probably market has not sufficient power to continue move to the upside. Still, on the 4-hour time frame, on the daily time frame, still we have to point that daily trend is bullish. Well, I do not see any significant patterns except that one. Okay, and potential butterflies that we have discussed even during the previous week. Well, currently in the recent week I do not see any significant patterns. Now let's shift to the 4-hour time frame. What we could see in general on the intraday charts, since we said that probably our focus on the coming week will be again on the intraday charts, on the scalp trades, something like that we did during the previous week. So our trades was just intraday trades with the very tight private object points and very short-term tradings. So we do not make any trades on the daily time frame. On the 4-hour time frame, what we see? We see that market has shifted to the retracement after it has accomplished this ABCD pattern. Okay. Now we see that 4-hour trend has turned bullish. This is nice, by the way, angle of person of the lines. We said, as you remember, during previous week, so if you want to possess yourself on the long side of the market, wait when the daily 4-hour and hour trends will shift bullish. So that has happened. We see nice thrusting move to the upside from the 618 support, from that low to that high. Okay, some pullback that's in general give us some hope that probably market could continue move to the upside. The market now stands right at the weekly pivot point. Well, in general, we do not have any patterns, any signs and signals except the trend. All that we have is just the upside trend on 3 different time frames. And from the one point of view, you can try to possess yourself according with the trend, but be sure that this will be sufficient for you to possess yourself, because this will be rather risky trade. Because safe possibilities to trade this market is to wait some breakout of the significant points that we have discussed. Okay, breakout to the upside or breakout to the downside. Still, if you want to trade it, okay, I just want to show you what could be done in general with this potential trade. So that's we have 3 trends, as I said, in the same direction. We see some signs of the thrust on the 4-hour time frame, some acceleration from the support area, okay, and the first retracement to the downside. On the hourly time frame, we also see the trend is bullish. You can see that market stands above this red line, the MACD predictor on the hourly time frame, and sees the stop grabber. Market has shown some bullish sign that's trying to shift trend to the bearish, but failed and closed above it. So if market will show some small candles in the same manner like that, with the trying to shift trend bearish, then close above, and again, this will point that probably market is ready to take out of these highs. So from that perspective, since we have all 3 trends in the one direction, the bullish sign, okay, we see some acceleration from the fib support on the 4-hour time frame, we could try to enter long. There's 2 different ways that could be applied for entry. The first way is more difficult, but could give you the best ratio between the entry point and the stop loss. If you drop your time frame to the 5-minute chart and will be wait for some clearer buy patterns around significant areas of support, for instance around that area. This is the 3-8 support from this recent swing up and the weekly pivot point. Maybe market on Monday will form some buy signals around that area, or wait for the clearer signs, for instance if market will show A, B, C, D, some deeper retracement, something like that. The simple way to enter is just enter from that area beg your pardon, and place stop somewhere around the 143 area, because if market will erase all that thrust to the upside and move inside that consolidation, that's butterfly buy, if you can see, the market starts this move, then probably we should expect for the further move to the downside. In general, if this real turn around on the to the upside, market should not erase that move to the upside. That's the logic of that potential trade. So choice is up to you how you will enter. Will you enter at all, because this is a rather risky trade, since we do not see any clear patterns, we do not have any signs and signals except the trend. So if you would like to trade the trend, then you could try it. If not, it's better to wait some significant breakout, significant levels, and after on some retracement to enter later with the more confidence. So choice is up to you. Just do not risk much, because currently market is really indecision, and I think that our primary task first is to look for the border of the triangle on the daily time frame, and to watch for will market return back to inside the body of triangle or not. And the second, our focus is to trade intraday with the small trades, because on the daily time frame is nothing really new, and nothing really significant happens during the current time.